So my background is as a Canadian CA. Started my journey in a startup out of university that was doing bookkeeping for small businesses across Canada and the US, and it was growing super quickly. It enamored me with the small business mindset and the problems that people go through trying to grow a business and how hard and how brave you have to be to start a small business. Super impressive. But then went off and worked for KPMG for 3 years, got my chartered accountant's designation, saw what some of the big companies in the world look like and all the things that you should aspire to do in your business that can technically be the boring stuff, but really when you tick all those boxes, you create some sanity in your life, and you should strive to do that in growing your small business. But definitely missed the excitement of startups. Went back to that world as a financial controller and then eventually a finance director of several tech brands that raised venture capital, and went through that kind of journey of rapid growth and then right sizing and then back to rapid growth and all the excitement that entailed and craziness. And then finally landed with a company called Fable that some friends of mine had started as their finance directors. They raised venture capital and grew an e-commerce brand from 2 or 3 million a year to up to $20 million a year in the space of kind of 2.5 years, which was an incredible journey.
Wow, incredible.
Yeah, I learned a lot. It was a lot of lessons learned along the way, and it was done at a time when consumer brands were growing like crazy. So it was a kind of drinking from the fire hose experience for sure.
Fantastic. Let's start with a question of growth first then, because you've been at a very fast growth brand that did that in 2 years, or profit first. And that's the question. You and I, we have to fess up. We work with some of the same brands together, and we work with a lot of different brands separately. You're working across 20 brands and I work across a number of brands. They all essentially say the same things, don't they? They ask the same questions and face the same challenges. One of those questions is around, are we growing top line revenue or are we looking for profit here? What's your view on that?
I think that the first 3 years of the 2020s was definitely focused on top line growth. And it was a time of crazy opportunity with everything that kind of COVID brought and the stay-at-home wave. And there was a lot of money put into a lot of brands, and capital was available from every source. So top line growth was the metric to face and pursue. And on the back end of that, we saw what happened when everyone went back to normal life, and the reality of top line growth and the cost that comes with it landed really heavily in sort of 2023. And there was a complete sea change in the industry on what it meant and how you were going to grow your brand and what was the options available to you. So as an accountant, I'm typically a conservative person, some might say, to a fault. But I think if you build your business from a point of profitability and focusing on simplifying your business into a average kind of order, your average customer, and understanding how for the kind of 80% of your customers, if you're profitable on them, you've built yourself a business that can sustain itself and it can grow. You can make mistakes and it's not going to put you under. So I think for me, top line revenue growth was always great. It's exciting and certainly comes with a lot more stress and a lot more
you've been
excitement.
that world of driving for top line revenue growth, haven't you?
Absolutely, yeah. We were going for 300% growth year over year in an e-commerce business, which we achieved and had the tailwinds to do so at the time. But it certainly is a lot more stressful. The mistakes can cost a lot more and your risk profile is much higher. I think every founder kind of has to ask themselves the question of, do you want to take that experience? And do you have the ability to probably go obtain the capital to fund that experience? Because for your average brand, that isn't really an option to grow at that rate unless you have a crazy product or a crazy opportunity in terms of access to a market and people's attention. So unless you have some crazy virality or something like that, you kind of have to build a business the old-fashioned way these days.
How do you find founders react to that nowadays? Because a lot of people in e-commerce have either been in that previous period or heard the great stories of success from that previous period. How do you find founders are reacting now to that concept? Are they actually relieved that they can build something sustainable, or are they resistant are they wanting that fast growth, amazing runaway success story?
I think everybody wants that at the end of the day, but I would say across the people I've dealt with, I've seen all kinds. There's some people who are always happy to take the steady path, build things on a fundamentals basis, and they see success over the longer term. And I think there's a lot to be said about that. And patience is the main kind of asset you have to have. And it can definitely work out. On the flip side of that, I think that being a founder and how much risk is required to build a brand, you do I think that's where sort of the conservative accountant part of me, I've gotten better over time of putting that kind of side of myself in its place. And you have to take a risk. That's how you build a business. You have to have that North Star you're chasing. And I think you got to build a business, even if it's growing steadily, you got to have a little bit of that in you to get your brand on the way to growth. Otherwise you wouldn't take the risks.
So when you first look at a brand and you'll get its P&L, what's the first thing you're looking for in terms of thinking, what state is this brand in? Where is this brand at? Where do you go to first?
I think for me, assuming that the numbers are right, and that's saying a lot for brands in that 1 to 10 million space, is the numbers are often behind and they're very late, and it's hard to steer a brand on that. It's not, finance and administration isn't something that most founders care about until it's too late. And so if you focus on it early and ingrain that in the way you steer your business early, I think it leads to a lot better success because you're not going to be surprised when things go wrong. But I think assuming the numbers are right, the first thing I look at is your month-to-month net profit. And you look at it back 12 months. You want to see what the shape of a business looks like. Every business has some element of seasonality to it. Is it something that sells well in the summer? Is it something that sells well around the holidays? Is it a big Black Friday, Cyber Monday business? What's the shape of the business look like in terms of seasonality and in terms of profitability? And when you put that all together and smush it into a year, are they profitable on a yearly basis? That's the first thing I look at. The next thing I look at is put all the costs together that they take to acquire a customer. The ad spend, the paid placements on an above the line, influencer and affiliate costs, all of the supporting agency fees that they use to put their ads out there in the world or generate their content or the branding. And you look at how many customers show up each month for what they're spending so that I can understand that how much they are really paying to acquire customers. What's that look like at different times of the year? And how does that compare to what that kind of first-time customer buys? So you have to very quickly shift away from just the P&L, and you need to merge some information from the P&L with information from your sales system. And then you can split it up as many ways as you want from there.